Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, here it is. I'm recording this on Friday the 13th as the market is closed. And what has happened? Well, we've hit all of our target numbers from last week's forecast, and it just keeps getting better. Today, before the opening, we had positive news come out with regard to the negotiations between the U.S. and China trade war. The news came out positive, and then right before the market opened, the president sent out a tweet that I believe confused a lot of even the institutional traders, and we were watching the futures markets drop right before our eyes, mere minutes before the market opened up. Let's take a look at the forecast and what these numbers mean going into next week. Well, last week right here was Friday, and after the market closed, I drew these forecast lines. I said the market will move up right here. Let me zoom in just a little bit more so you can see how valuable these charts are. I said we would move up to this point right here, setting new highs, and then I said we would start to pull back. Well, guess what happened? We hit that target on Thursday the 12th, continued to press that target on Friday the 13th, and then we started to pull back from the highs. Now pay very close attention here, because this is going to be some of the most valuable information that I can give you as we move into the year end, which could be the Santa Claus rally, year end rally. Now keep in mind, the year end rally does not last forever and ever. It's a very short window of opportunity where the last trading days of the year we generally see a rally in the market moving into more or less the first week of the new year. And historically, 35 years out of last 43, we've gone up over 1% in that time period. Now, is that a guarantee we're going to see that again? Absolutely not. But the charts do give us some clues as to what we could expect. Next week, because of this spinning top, almost a doji candle, this tells us that the buyers tried to push it up, sellers fought back, and we close with what is known as a sign of indecision. That's what a spinning top means. Now, the telltale sign of weakening or weakness of that buy side momentum is that we had a lower volume day today on the 13th by about 15%, and that tells us that the buy side is starting to weaken. So next week for the Dow, I believe we're going to start to pull back to this moving average right here, and then as we move into the last week of 2019, I think we're going to start to see a bounce. And I'm not going to get ahead of myself here, but I do think that we're still going to close on record highs at the end of this year, but stay tuned for that. Short term, we're expecting a pullback to the moving average, possible bounce, and then we'll go on from there. So let's take a look at the spiders. That's ticker symbol SPY, basically the ETF for the S&P 500. We have a similar picture, some differences, not much, but some differences in that I did expect the market to move up and then start to pull back. We have hit my target right here, my target new high right there. We're just now starting to pull back, so I'm going to draw this line as my forecast for next week, similar to the Dow. But look what's happening. We have lower volume again, and right here the CCI is starting to hinge. What does that mean? Well, that's a sign that the momentum, the upside momentum, is starting to weaken, and that supports my forecast for next week. Looking at the tech sector, that's QQQ. That's basically representing the NASDAQ market. You could zoom in here and you could see similar things. We hit my target right here. We started to go higher on Friday the 13th, almost surpassed volume, but both the stochastics and the CCI are still moving higher. They're not hinging lower. So for the NASDAQ, it's going to be slightly different. I think on Monday we might even see a higher high, possibly a higher high, and then I think we're going to start to see the pullback in the NASDAQ right there. So stay tuned for that. Looking at a more broad-based index in the Russell 2000, ticker symbol RUT, we could see again similar story. Hit my targets precisely in all these markets. Slight difference in the Russell 2000, which is a more broad-based index. You can see we hit my target here on Thursday the 12th, continued on hovering at the target. We opened up at my target price, right at this high right here, into new highs yesterday, but we opened up the market on Friday at my target, and then we started to pull back again precisely as I expected and predicted last week. Notice down here, the stochastics oscillator is now starting to turn lower, and the CCI is right at a sell signal. Now, I want to spend a little time explaining this to you because although we saw a higher high on the 12th and a relatively higher high on the 13th, notice the highs on the CCI. We're seeing lower highs on the CCI as the price action is going higher highs. That is known as a negative divergence. It's one of the most powerful signals that you can identify on the CCI. It is negative. This is also a bearish Harami pattern. It's as bearish as a bearish engulfing pattern. I think the Russell 2000 is not going to set a new high next week. I think it's going to pull back and test this period moving average, 20 period moving average right here, and that is my forecast for the Russell 2000. On the VIX, that's a volatility index, which is more or less a contrarian indicator to the S&P, I said that the VIX would most likely move lower to fill this gap. We haven't done that yet. I say yet with a capital Y because I think that the VIX is still going to go slightly lower right here, fill that gap, and then I think we could start to move higher. Remember, it's inversely related to the S&P, so if the S&P is expected to go down early in the week, we're expecting the SPDRs to go up slightly before pulling back. As we see here, the VIX inversely related will more or less rally towards the end of next week. Notice down here, the stochastics has crossed right there, the K line, the blue line has crossed the red D line. That is a sell signal. And when you see the CCI crossing below that black line, which is the zero line, aka the momentum line, that's telling us the sellers are still charged. In other words, the momentum is still moving lower, and again, that supports my forecast on the price action for the VIX. Finally, OUSA, it's the fund put together by Kevin O'Leary. I find that is a good cross-section. I do not hold a position in this fund at all. However, I do forecast and report on it because I think it's a good cross-section of the general markets. And what did I say? We would reach into new highs. We did that Wednesday and Thursday, and we see a spinning top here, get this, on much, much lower volume. The low volume tells us the buyers are losing momentum. The stochastics are crossing with a sell signal. The CCI is almost at a sell signal, so I think we're going to see lower prices on OUSA. Stand by for that. If you'd like to learn more about what we do at The Market Guys, just go to The Market Guys website, www.themarketguys.com. Click on the video tab right here at the top. That will bring you to our video library where it's filled with what we call market shots. These are very short educational videos that will explain to you the terminology that we use and some of the price patterns that we identify along the way on the charts. Now remember, these are not guarantees. These are educational topics that I think will help you. I would say pay particular attention to dojis and spinning tops because that's exactly what we saw mainly across the board on most of the charts as we close the markets on Friday the 13th. So pay very close attention to that video. Hope you like it. That's a value add from The Market Guys to you. Share it with your friends, and I hope to speak with you next week. Have a great weekend, and we will talk to you soon. So long.
This video segment is a small part of what The Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.